All right. Welcome, everyone. My name is Lori Skinner, and I'm a producer for Microsoft. And I'd like to welcome everyone to the BlueVoyant and Microsoft webinar on managing the rising cost and decreasing limits of cyber insurance. The webinar should be about 45 minutes, including about a 10 to 15-minute open Q&A at the end, where you'll be able to come off mute and ask your questions. We're broadcasting this through Microsoft Teams, and it's being recorded by the Microsoft Corporation. By participating, you are giving consent that you'll be included in that recording. Feel free to post your questions in the chat throughout the webinar. Our experts are standing by to answer them. The deck and webinar recording will be shared with you 7 to 14 days after the event to those that registered. If you haven't registered, please do so now with the registration link in the chat window. Thank you for adhering to the Microsoft Code of Conduct that's also posted in the chat. We have Jim DeMarco and Jennifer Mulvihill with us today. So with that, I'm going to turn it over to Jennifer to get us started.
Okay, thank you so much, Lori. Hi, thank you everyone for your time and interest today. This is a topic that I find so interesting and challenging, how to reduce cyber risk to get better insurance. As Lori said, I'm Jennifer Mulvihill, a lawyer by trade who worked in the insurance industry before cyber insurance actually earned its name. It used to be called technology errors and omissions. And as the internet became a vehicle for cyber crime, these policies were renamed cyber insurance. I'm the head of the BlueVoyant Insurance and Legal Channel, and we provide, amongst other services, insurance consulting services and cyber risk mitigation services along with Microsoft to improve your cyber program. If you have insurance, we help you obtain better insurance, whether that means broader limits or reduced premiums. And if you don't have cyber insurance yet, we hope to help you find applicable coverage. I'm excited to be here participating with my partner, Jim DeMarco from Microsoft, who BlueVoyant considers to be a friend and true collaborator. So with that, I'll turn it over to Jim to introduce yourself, and thank you again.
Thanks, Jennifer, and good morning, good afternoon to everybody. Jim DeMarco from Microsoft. My role within Microsoft is I lead our digital strategy practice for insurance globally. So I work on actually how do we partner with the industry and with other collaborators like our friends from BlueVoyant to actually provide the best digital capabilities for whether it is the insurers themselves or for their customers around what around key areas of their business. What is changing in the marketplace is what I've spent a lot of my time looking at. And as a result, I have real great opportunity to work with our friends from BlueVoyant in particular on how do we provide the best business outcome to our end customers in the area of emerging risks. So things that insurers care about, and then ultimately, what do I actually do to provide that capability using technology or using advisory services to the end customer or business. I thought, Jennifer, might be interesting for us to just do a quick glance at the headlines in terms of where the industry is going, what's going on, and so forth. And I thought it was really kind of timely. Today is, as we're recording this, the 16th of November. There was an article in yesterday's Wall Street Journal about the cyber insurance industry. And I thought, hey, what perfect timing. We scheduled this webinar a little while ago before the Wall Street Journal decided to put out this article. But I thought it was interesting to call it up, and I thought it might be sort of fun to start our conversation with that. Because one of the things that said in that article, and I'll leave it to folks to go get online and take a quick look at it, was that the cyber insurance industry is finally starting to stabilize. That is because we have gone through a fairly recent period where the insurance industry, the cyber insurance been around for a little bit, decided, hey, you know what? The risks we were looking at got really, really expensive. And so rates just went skyrocketing. In fact, there was an article 2 days ago about how rates are still going up in cyber insurance. And, so it was sort of interesting to contrast these two articles, the Wall Street Journal from yesterday and the one from 2 days ago, where they talked about, why is the industry starting to stabilize? And one of the interesting things that came out in the Wall Street Journal article I thought worth calling out was we're starting to, as an industry, get our hands around some of the risks that have really driven change, like, for example, ransomware risk. It seems to have been the talk of 2021 and into 2022. And one of the interesting things I thought to see on this was that, well, they're starting to see that they understand it. It's not that they say they're lowering their rates. Congratulations, everybody's got cheap rates. That's not how that's working. But one of the interesting things I saw in there was the fact is we're starting to understand exposure to ransomware. Jennifer, I thought that might be sort of an interesting place for us to look at as we sort of move this conversation forward is why are we seeing, a better understanding of ransomware? Why are we starting to see that level setting in the industry where they're starting to feel like they've got their hands around it? And I have some ideas, but I thought you might, as colleagues might want to lean in against that just to talk through it.
Sure, I appreciate it. And I had a really busy day yesterday, so I didn't see the Wall Street Journal article. So I promise I'll read it today. But well, at least, what it symbolizes is that, the industry is talking about it. Cyber insurance is part of commerce. And so it's very exciting to see cyber insurance being written about, being reported in publications like the Wall Street Journal and, maybe the Times, and not just very specific insurance industry publications or even security publications. So I always like seeing articles about cyber insurance in those types of publications. And I also enjoy seeing reporters speak about cyber insurance in some of the news channels that we watch. So that's very encouraging. Yeah. I believe that cyber insurance is more than just a policy. It's a program, and it offers fantastic benefits. Like I said, it is part of our commerce, and actually it's part of our cyber defenses as a nation. I truly believe that if each individual company puts in some cyber defenses and includes cyber insurance as part of those defenses, more than just a risk transfer tool, a financial, risk transfer tool, then we're really contributing to the broader defense of our nation and preventing bad actors from getting into companies, then getting into the supply chain and getting deeper and deeper into our critical infrastructure. Insurance provides a lot of value before there's an incident. And I think this discussion today, we're going to focus on, the proactive services that jointly we provide and how that affects how you approach your insurance policy proactively, not just when there's an incident and after there's an incident. Underwriting questions map to critical security controls. So that means that you can use the underwriting application as a tool. It's almost a self-assessment to help you focus on gaps in your company, helps you prioritize what you need to focus on. Certainly with an eye towards, how do I get the adequate coverage? How do I prevent our company from not being renewed? But as you mentioned, there's more of an understanding of, what those critical controls are, and certainly ransomware, which blew through policy limits and challenged underwriters and really brought much attention to these attacks to the federal government. I think that underwriting application provides a lot of data. And I know some of them can be long, so I encourage everyone to look at this questionnaire as just an opportunity to learn a little bit more about your organization. This also, I'm sorry, go ahead.
I realized you just said you hadn't read the article, but you could have written it, because more or less where that came out too. Sorry, I interrupted you there, Jennifer. Yeah.
No, I always appreciate being nominated to write something. I love to write, so I'll take somebody up on that. But with cyber insurance, insurance and underwriters can also be an extension of your security team. So it means that CFOs and risk managers and CISOs, don't have to go at this alone. And I think cyber security is a collaborative process. So I encourage everyone to look at your cyber insurance program as an extension of your own internal security team. Unfortunately, our managed detection and response customers have told us recently that some of them are being denied coverage, some of them won't be renewed, premiums are escalating, certainly having protocols in place such as MFA are required for insurance, and if it's not in the environment, then they won't even be considered. I think as you mentioned, that's changing. The ransomware claims brought in a lot of data. Insurance companies hold a lot of data, and that's really important for us to understand, especially when organizations may report a claim to their carrier, but may not be required to report it under any other type of regulation. Market intelligence, really validates that statement. So in line with the theme of collaboration and working together, Jim, I'm going to turn it back over to you to discuss a little bit about the Microsoft solutions, how you help customers understand risk and manage risk, and then how BlueVoyant, helps with that process, and why our unique combined solution really results in a lot of positive insurance outcomes.
Sure, thanks. So, Jennifer, let me pick up on a couple of things that you said, and it actually is played out in that article that I referred to very beginning. Is we're starting to get our hands around understanding the risks themselves, but that is driven by the data that is available. One of the things you noted is we're starting to get a better understanding, just a slightly better understanding. It is a continually moving target, particularly in the area of ransomware. And we're starting to see things like some insurers are saying, you know what, I'm not going to write insurance coverage, if you don't have multi-factor authentication turned on. Great. How do I prove that? Oh, I did it. Congratulations. Actually being able to share your posture and being able to say, prove where you are is a key element of understanding what kind of risk you present to an insurance company. And that's where they're starting to see and understand the places where you have a relevant risk. One of the things I'll actually, at the risk of sharing slides to everybody, I'll share just a couple of things that sort of make a certain amount of sense, I think, for people to understand around how this shift towards resilience and understanding where you are and what you stand, where your security posture stands, is a pretty relevant thing. Normally, for inclusive design purposes, we do leave closed captions on when I present. So for those of you who are seeing the closed captioning, that is actually by design. But as we see it, this evolution of being able to explain your risk posture to your insurer, you need to be able to understand, what you're doing to control against these things. Ransomware is a great example. We know that the vast majority of attack surfaces or attacks that come in around ransomware have to do with identity-based attack. Therefore, great, how do I protect against identity? That's why insurers care about multi-factor authentication. Well, it turns out identity for an end employee who is just so focused in on one small piece of the business, while that is pretty important, it's much more important for identity to be managed and strictly controlled for people who have broader, more administrative access. So what Microsoft has been developing and delivering on actually for the last number of years is this idea of providing an understanding of what your security profile looks like, providing a visible sort of dashboard type view of here's what your security profile looks like in an area around controls that actually matter to an insurer. So we basically amplify three basic areas around cybersecurity for most of our customers. This is really for how do you look at your identity? How do you look at the devices that might get actually attacked? And then how do you look at your applications? And each of those sort of three areas has a number of controls that you might look against. So providing customers not just a view into what you've got so that then you can share your profile with your insurers is, aha, you are not a bad risk, you are a good risk because you have these controls in place. Great, awesome. But also providing customers a measure of guidance associated with where you stand and what you need to be able to do to protect yourself is another sort of element of that story. Now, scores are great and understanding dashboarding is really, really great. One of the interesting challenges, though, is that the vast majority of companies out there who are tier one enterprises with 65, 70 person CISO organizations are able to actually provide that information pretty much at ready hand. That represents such a tiny percentage of the market as not to be able to sort of express out relatively well, just understanding the data itself. That's where you need to really have that sort of guidance around people who can actually interpret the scale, interpret the story, and interpret the numbers to provide that measure of additional sort of not only guidance to the insurers around what your risk profile is, but also what you should be able to do about it. The tools are great to a certain extent, and our ability to sort of share that is really great to a certain extent, but then the additional sort of need to go into more detail and the need to be able to provide specific customized plans around prevention and risk resilience are a key place where somebody like our partner BlueVoyant comes in. Just one little more thought on this is particularly as we see the shift to cloud. Shift to cloud was a large enterprise play. It is for everybody these days. And now we see this construct of actually how do you defend not only your surface of like my computers, my people, my email, and so forth, but how do I look at my broader infrastructure when I'm now actually, renting my compute from cloud providers? There's another key shift in the resilience movement around actually providing protection across all of your surface, which would include the stuff that you have on your own premises and your own, in your own set of environments around data and technologies, but also through your cloud service providers. One of the things that we're really seeing critically in a move is to coordinate across multiple cloud vendors. So one of the things we're working on now is providing that measure of scoring, not across just say like your Microsoft footprint, but also your footprint from the other cloud providers as well. And that's where a place where you could imagine the data is very much available. The ability to interpret it becomes increasingly complex absent having good dashboarding, which is what we're trying to do, and good tools, but then really providing that measure of deep insight, which is why for certain circumstances, it makes a ton of sense to actually have that person who can be your guru, your guide along the way. That's actually, so BlueVoyant, maybe Jennifer, maybe we could talk a little bit about how that guru and guiding mode that you guys provide, what that brings to the table.
Sure, and thanks, Jim. And you really set that up perfectly. I think that's why we emphasize doing this together. The tools are really important. They certainly provide a lot of data, but it's very important to be able to explain and interpret that data in context. What does it mean? You can't just have data in a vacuum, and that's why we work together, because the BlueVoyant team is really eyes on screen. You may have heard the term, with respect to the bad actors and attribution, who are the fingers on keyboard, who's behind the keyboard. And when we look at it on the preventative side, it's like the eyes on the screen. Monitoring is 24/7. That's the way it has to be. And those are the services that BlueVoyant provides. So human eyes on the screen 24/7. That's certainly one of the questions that we see on almost all of the underwriting applications. You need the tools, but also you need that human element, that intel, the trained experts who understand how to take those scores, understand how to take those alerts and put them in sort of meaningful context. And I mean, very specifically, we're looking at, are there alerts that need to be addressed in a manner of escalation? And that's, what we can provide. It's also a way for us to look at and weed out false positives. And not going too in depth with those services, and keeping in line with the theme of collaboration, we all know that the industry is suffering from a skills shortage. I don't want to say suffering, but I want to say that there's an opportunity. So it's a great industry to be part of. There's so many opportunities, and so that's what we're looking for. So we're looking for experts, and so any company that may feel that they don't have the experts, on the team in-house, there are so many partners out there and so many ways to expand your team if you're not in a position to hire or you're not finding the right experts. So that's also what we provide. And some of the experts from BlueVoyant, just factually come from government. So we have trained experts, from the FBI, NSA, and that kind of training and real life experience is really important when you're trying to interpret this intel. So I always feeling confident that as humans, we won't really be replaced. I mean, there's still a role for all of us. And I think that's kind of how we fit in. So it's the eyes on screen, it's interpreting the tools, and certainly being able to interpret this very technical data and feedback to an insurer whose number one role is to provide insurance and understand as much as they can the risks of the organization. It goes for the broker as well. Having as many tools in place, as much data, and then somebody who can interpret it, not only from a security standpoint, but from an insurance context. Where does this fit into an underwriting matrix? Oh, and that's really important to kind of, translate that and speak that language as well.
Yeah, I think that's a great points all around. Everyone should be so lucky to have ex-NSA folks in their cybersecurity team. Not a ton of them out there, right? I think that's one of the interesting challenges as we look at businesses, and also look at it from the insurance perspective for at a certain level. It's worth understanding insurance companies treat all risks in a very similar sort of model and methodology. We take an assessment of what your risk posture looks like, and then we project out what is the potential for loss with you. So how much, if you're going to have a loss, how big, how wide, and so forth over a period of time. We write an insurance contract with you that says we'll cover you for so much over such period of time, and we'll help you with your financial burden. That's more or less the model for all types of insurance, everything from fire insurance to even your life insurance policies. Cyber's different in a key critical area. Snapshotting cyber is very different than snapshotting, say, life insurance. I can certainly take a look at Jim DeMarco, see his height, weight difference, what his age is, and so forth, and project out what's the likelihood he's going to die in the next year or two. But understanding cyber is more like whack-a-mole than anything else, because it's a continuously operating risk. It's a continuing evolving risk. And so one of the key things that we see that makes the cyber insurance snapshot view, hey, I'm just going to take a picture of where you are, a little difficult for insurers is that what's the active risk today may be a very different risk tomorrow. And what your cybersecurity profile looks like today when your IT profile looks like this may be very different tomorrow than your IT profile may look, where you have more people, different applications you've launched, and so forth. So understanding that sort of cyber is more of an active continuum, I think, is a key element that drives, sorry, I'm going to use the term human element again. I know one of the chats in the window said that was a good use of terms. I actually agree with it. The key nature of actually having a continual partner to keep you up to date as to where your risks are, to keep you sort of understanding what your exposure looks like, and help guide you with that next step. The dashboarding tools are great for keeping update to what the data is. That's a key element of it as well. But then actually being able to say, and here's what you should go do about it. I think that's one of the things we're seeing in the insurance industry more generally, is the move toward understanding that cyber is more of a team sport than it is a contract. And I think that's an element where we see the insurance company has a role. The insurance company has a role of helping you assess and understand what actually matters to you, and saying, here's how I'm going to handle you financially and take care of you if something goes wrong. The folks like BlueVoyant, that you have the role of actually providing the actual expertise in, this is what your problems look like, this is what you should be worried about, and these are the things you should do actively. Folks like us in Microsoft, we provide sort of the data and capabilities to say these are the actuals as opposed to guesses as to what's right and wrong. This is the controls you really need to put in play, and then ultimately actually the technology for those controls. Those three teams work together also then, of course, with the actual customer, the actual insured, to actually then provide that measure of protection against these active risks in a continuous basis. And I think it's really critical to understand we can't just look at this as the same as other types of insurance. It's one of the reasons why premiums kept jumping, because the insurance industry was still trying for years to try to treat cyber risk as though we were the same as errors and omissions risk for directors, or media risk for, one threat of cyber came out of the media industry, where they were worried about new media actually saying bad things and getting sued for libel. That is very different than ransomware, but that's how the risk was, defined 20 years ago. Now our ability to actually understand that it is active risk, where we have to have resilience in play, that's where it makes a lot of sense for us to look at the tools and the guidance as associated with it. I don't know. So Jennifer, any thoughts in that area, just in terms of how we look at what's now and what's evolving in that space of collaboration?
Sorry, Jim, I think you just froze, at least on my end, for a minute. I think that question was addressed to me.
Okay, yeah, it was, and apologies. So additional comments and thoughts you had in that respect.
Oh, I think that what we're learning, from cyber insurers is that they want to be part of the conversation. And, the federal government, in fact, President Biden had invited insurers to, come to the White House and discuss how insurers can be part of this broader solution. And I think it goes to collaboration as well, understanding the risks and understanding, how do we mitigate the risks with partners. And, just another fact, and it's not designed to be a sales pitch, but we all have relationships with the carriers that are underwriting cyber risk. So it's very easy for us to have conversations with the carriers and, again, help translate what our customers are doing very well to mitigate risk and explain why, the programs should be more beneficial for them because they're putting these protocols in place. So a lot of these discussions, we've been working with carriers for many years, and so a lot of these discussions have evolved, and the carriers are very receptive to what we're trying to do in the market. Present them with better risks, help the brokers stay part of the conversation and understand the tools and, again, the interpretation of the results from those tools and apply it, to your underwriting profile.
So I think that's a the broader story on how we're seeing this work. The role of who the players are is also, I think, is worth understanding. The headline grabbers have been massive cyber attacks, like the Colonial Pipeline attack and the SolarWinds attack and so forth. And while those are all very true, we have also seen the role of nation states evolve in this business. Most of that doesn't apply to most small businesses, though, right? I mean, most of this is cyber criminals acting in in a manner that's going to go make them money. And I think that's one of the things that we also need to call out here as we look at how the insurers look at this business, but also how we actually work together in this business. We need to understand that this industry of cyber insurance, or this industry of cyber crime, and it really is an industry, is made up of some big players who do big crazy things, and then there's also small players who are in it just to go make money. It is relatively well known in our patch that someone can go onto the dark web, download some software, and start launching phishing attacks. How do we actually prevent that from happening? That is a public policy question with public-private partnership, and we need to be able to play on that. Totally agree. There is also, how do I protect the small business that's running a dry cleaner that has a very small online presence that needs, in order to be able to tell you that your clothes are ready and here's the rates to get hems, to get pants rehemmed or something like that. That very small footprint customer is every bit as vulnerable as the larger customers, and there will be places where they're going to have trouble getting that coverage and insurance if they don't get the small simple things right. So what we're trying to work on by using some of these tools is to identify, here's the places where you become a less attractive attack plane for a customer by having certain of the capabilities that we turn on. By multi-factor authentication is an easy one, but there's other ones like keep your software up to date is another one. Like if we know that one of the largest breaches of personal financial data came when a fairly sizable retailer forgot to update a piece of their Adobe software as a result of vulnerability that had been known for a while was exposed, and suddenly retailers large and small were getting hit with financial fraud, and the reason for it was just simply not keeping your software up to date. So part of the things that we're seeing is if we can just do the basics you can actually make it harder for these scalable bad actors, or the small-time criminals who can scale because they have good software they downloaded off the dark web. We can make it harder for them to get at you. And if it's more expensive to get at you than it is to go move on to somebody else, they won't go after you because they treat it as a business. And this is some of the things we're starting to see, providing that measure of guidance. Sometimes it's very detailed guidance. Sometimes you really need to have somebody really get into the weeds of your business. If you are dealing with highly super confidential information, or you're dealing with detailed regulatorily maintained information, you're really going to want to get into the weeds on it. Sometimes if you're just running a dry cleaner and you just want to make sure that your people know that their stuff's ready and so forth, then you just need to use the tools and tick a couple of boxes and life gets a little easier for you. That's, I think, how we're seeing this evolve. Where we're going to see it going is providing that measure of guidance to the individual business owner, and then to the businesses themselves on how much you need to do the basics. Then what's that next level, and that next level, I think, is where we're going to see this business really, really grow over time. And I'm thankful that the Wall Street Journal is saying that's how they see it also, with the stabilization of the market, because we're getting it better at understanding and articulating what those risks are. I think that's one of the things we're going to see this market move. So it boils down to, use the tools you got, and then, get a partner in there when you really can't interpret them, or when you really have a broader, more detailed risk where you really need to have that really intense partnership to really get at it.
Yeah, and Jim, I'm glad that you mentioned the smaller businesses, because, when we talk about headlines, ransomware certainly dominated the headlines for the past couple of years, but business email compromise, phishing attacks and social engineering, and that is still sort of the risks and the attack methodologies that are resulting in the largest payouts. So it's insurance measures risk by severity and frequency, and so certainly ransomware attacks, that checks the box for severity, but business email compromise checks the box continuously, for frequency. And so we're still looking at those business email compromises that result in fraudulent wire transfers that can really hurt a small business. And we believe, sure, Microsoft believes, BlueVoyant believes that every company deserves to be insured, every company deserves to be protected, and so it doesn't matter the size of the business. And that's what's really interesting from an underwriting perspective. That's why another reason I think cyber insurance is different from other lines of business. It's not so contingent upon the size of the business, or necessarily the number of employees. Certainly that correlates to the number of endpoints that would have to be monitored, but every business, based on security controls that are in place, or lack of training, or an individual or employee that could fall for a phishing attack, could still expose the business to frequent attacks or severe attacks. So it's not like other businesses where it's a very straightforward, what's your revenue, how many offices do you have, what are your M&A plans for the future. So I think that it levels the playing field in a lot of ways.
Yeah, I appreciate it. I think there's one other difference worth calling out. We've talked a lot about underwriting and your freedom to understand your risk. I think another key change and difference in cyber from other risks is what happens when things go bad, right? So how do I actually handle a claim in the underwriting or in the cyber space? A friend and colleague of us both was quoted not too long ago as saying this: when you have a security breach in cyber is not the time you want to learn how to actually figure out what to do when a security breach happens, right? The first thing that tends to happen is the oh my God moment, right? Like, suddenly my entire business is at risk. The world's going to come to an end. We're going to start seeing, lots of frogs jumping across the road, and suddenly it's going to be raining blood, and all these horrible things are going to happen because this happened. Understanding that partnership level, that understanding of like what happens when things go wrong. I have a phone number I can dial. I have somebody that I can have on the other end. The insurance companies are really good at that. The insurance companies rely exceedingly heavily on incident response teams who then can come in and understand what's the problem, understand how to stop the bad thing that's going on. Because it is the norm rather than the exception that when a bad act occurs, it's still going on by the time the actual insurance kicks in. And I think that's a key element of some of the like the how do we look at this risk a little bit differently. It's not like I had a fire in the storm room and now I need to bring in an adjuster to deal with the claim. The first thing I need to do is get somebody in to put out the fire, and then understand what was the root cause, go back through and fix the problem along the way. That's a key element of, I think, what some of the tooling we bring to the table, some of the capabilities we bring to the table, the incident response teams. BlueVoyant has incident response. Microsoft's got some capabilities in that area as well, where we really need to work together to understand how do we, to bury another analogy, how do we unwind, or unscramble the egg to get you back to the place where you were beforehand? And how do we put in preventive measures in the place, that are there? Or how do we guide you to make sure that you don't have the fire in the first place? Great example is how do you make sure that all of your files are backed up in a triple secured spread location, like, for example, in the cloud, where you then have, if somebody attacks and seizes up a computer or a server, it actually already has a native copy already out there. Those are the types of things I think that are quite relevant for us to look at in the claim space and in the prevention and resilience space, not just in the underwriting space. I think that's really reinforces this idea of this really is a team sport and a continuum. Great. I think, Jennifer, as we sort of talk through this, we sort of laid out some of the things we wanted to have. A couple of punchlines I think I've captured just from our free-flowing conversation here. Yeah, you need to have your data. You need to know what your data is. You need a partner to actually sort of interpret and analyze the data. And we need to look at this as a team sport. Few info things like keep your software up to date are certainly there, but then actually provide that measure of capability to your insurer to say, hey, this is where I stand, and then give you the best view of your risk. I think those are some of the takeaways I've taken. Any other key takeaways before we open it up to Q&A?
Sure. Well said, as always, Jim. I will just add as a practical tip. Once you've done all of this, be your own advocate. You all have brokers, but also, show off your good work, and underwriters want to see that. I mean, we've had conversations with underwriters say, yes, we want to see the testimonial. We want to see what you've done, not just on the underwriting application. So don't hesitate to provide underwriters with a supplemental letter that just, provides some of the interpretations of, we've put in all of these great protocols in place. Like, this is our score. We've interpreted our score. We have this 24/7 monitoring. It's okay to add to your underwriting application, especially if you want to show off all this good work. So I would say, look at the underwriting application as a fun exercise, as an opportunity to self-assess. Make sure you are using tools and, implementing a way to interpret those tools, and then really supplement your applications. You can speak to your broker about it, speak to your partners about this with some kind of, a letter testimonial that says, just wanted you to know that we've done X, Y, and Z, and put that in your underwriting file. Make sure that's documented, because you want this for your renewal. You may be able to do this mid-policy term. Underwriters accept, good work mid-policy term. It doesn't mean that your premium will change necessarily, but it means that you'll be looked at favorably during that policy period. And then I would also start to put these measures in place at least 3 to 6 months before your renewal if you do have insurance. Once you choose your tools, you need time to deploy them, you need time to interpret results, and you need time to deliver all of that to your carrier. So start the process, at least 3 to 6 months. And enjoy it. You're improving your security posture, not only for your company, you're protecting your customers, you're protecting your employees, and you're contributing to the security of our nation. And you have our federal government looking at insurers as part of the solution. So that again, it goes to the team sport.
Yeah. So thanks. So Lori, I guess if you could open up for any Q&A, we're happy to take it live. Also happy to take any questions people want to throw in the chat window. And I believe our contact information has been shared. So if there's any questions that sort of pop up after this conversation is concluded, and hey, Jennifer, what to think about this or that type of thing, feel free to reach out directly as well.
Yeah, absolutely, Jen. So for attendees, it's a perfect opportunity to come off mute and ask for questions that you have for Jim and Jennifer. Don't be shy.
It's also possible that we've answered all the questions that anyone has ever had on this topic, or at least the questions to date. So we're more than happy, again, as things come up, do see someone is typing something in the window. So we'll pull that question in as it gets ready. But do you see trend of secure scoring being reviewed by insurers? The short answer is absolutely yes. The longer version is anytime an insurer that we've spoken with that has had access to secure score data, Microsoft secure score data, they have used it to provide a perspective on what is the inside out posture as opposed to the outside in posture of an insured. There are several insurers who actually use that data live today because of non-disclosure. I can't say specifically which ones. We have seen a great deal of interest and uptake in the industry. With that said, one of the key things to call out in this area is that a customer's secure score data, Microsoft cannot share. That is the customer's data. That is a key strict element of our trust posture with our customers as well. We run on trust around here. So we will share our data with you. We will not share it with an insurer absent your consent or absent you working with a business partner whom you have already consented to see your administration and granted them the approval to share that data as well. So if, for example, you're working with BlueVoyant and they are, in your environment and you've given them consent to see administrative console and you've given them permission to actually talk with an insurer, they can share that data. You can share that data directly with the insurer as well. So we've seen an enormous amount of interest, but there is also an ethical and trust tenet that we want to really call out here to say that that information is shared by our clients, by our customers, rather than by Microsoft with the insurance industry. That's a key core discussion there. Thank you for the outstanding question. Really called out something that we'd intended to talk about today as well. So in the absence of seeing other questions, Lori, I want to turn it back over to you, and more than happy to take additional questions as they come after this webinar. And again, with my thanks to Jennifer and our great partnership between BlueVoyant and Microsoft.
Yeah.
Oh, that's great. Oh, I really appreciate it. Jim and Jennifer, great job. Thank you for the presentation. And thanks everyone for joining us today. If you could take just a moment and take your time, submit a short survey. Let us know how we did. Let us know what subjects you'd like to hear more about in the future. And as of that concludes today's webinar. And again, thank you, Jim. Thank you, Jennifer. Thanks for everyone for joining, and enjoy the rest of your day. Thanks for joining.
Okay. Bye. Thank you.